You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, welcome back to the Option Block, your favorite bi-weekly source for all things options related. Bi-weekly, why is that? Because it's every Monday and Thursday, noon Central, 1 p.m. Eastern. Not every 2 weeks, but twice a week. It's one of those confusing terms that can mean a couple of different things. So every Monday and Thursday, noon Central, 1 p.m. Eastern. That's it. I think we'll be off next Monday for the Christmas holiday, but we'll be back on Thursday. So we'll be most weeks every Monday and Thursday. Next week, maybe holiday week's a little bit different. But either way, you can always hit us up and join us live via Mixlr, MIXLR. Send in your questions, comments, a bunch of different places. theoptionsinsider.com. Again, be on the lookout for the brand new spanking version of that, hopefully coming sometime soon. We're dotting the I's and crossing the T's over there. So if you're seeing some weird things on the website right now or something's not working, that's because we're tweaking and making new stuff. Sometimes that messes up the old stuff. So let us know if you see something weird, and we'll get on it. So this current version keeps going along even as we are building the future. So stay tuned for that. And of course, however you listen, make sure you hit us up. Questions, comments, insights, pearls of juicy wisdom. We do indeed enjoy hearing from you guys. All right, and joining me, speaking of us guys here on the show, let's see what guys we got. Let's start off over there in the land of St. Charles, quiet, tranquil, scenic, where we are joined by Uncle Mike Tussaw from St. Charles Wealth Management, a.k.a. the place with the fox. Mr. Uncle Mike, how are things in St. Charles today, sir?
All is well. And I like the idea of us celebrating Easter on Monday, and then once we have Easter, we can celebrate Christmas on Easter.
Double.
We'd be the only show on the web that would do that.
Or we can do just a double day, Easter and Christmas. I don't know. That would be kind of that'd be a lot of food, and they have an egg hunt and presents all on the same day. The kids would be so confused, it'd be crazy. But it would be fun. Speaking of fun, let's get to it. We'll be joined in a little bit by the Rock Lobster. I think he's off finishing up some mentoring and all that good stuff. So we're going to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading. What is lighting it up in today's activity? And we just still another day of red on the screen. The market not really liking what it's hearing out of the Fed, and the perhaps not as dovish as they were hoping for. So the market took a turn, of course, on Wednesday, and continuing that turn to the downside on Thursday. As we're talking right now, most of the major indices well into the red. Got S&P off close to 1.5%, not quite. The NASDAQ off a little bit more, 1.65%. The Dow off 1.75%, threatening 2%. Seeing gold catching a little bit of a bid here today. Also, crude oil actually selling off earlier and rallying in the week, then selling off, now rallying a little bit again. Crude oil is a weird beast, hovering right around 48 there in WTI. We'll get to more crude oil, of course, coming up a little bit later today on TWIFO, but it has been a weird beast to watch out there. We'll get to crude in a little bit. There's a lot to unpack here first. We got to start in the land of the Fed. Unfortunately, we like to mock macro here on the show, but sometimes the macro winds catch us and they take us and they blow us wherever they want, and you kind of have to go along for the ride. And that's kind of what we saw this week. There's a lot of tools out there like FedWatch over there at CME and others telling you what the market is predicting for the Fed. A lot of people are still leaning on the current rate hike that they saw, the quarter point, excuse me, but also leaning towards the current market volatility, a lot of broad macro trends, not leaning towards raising rates, all that kind of combining for the Fed to kind of take their foot off the gas. And they kind of did, but not quite what the market was hoping for. The market actually, we started rallying a little bit after the initial, the decreases for next year were first announced. People saying, okay, the Fed's kind of getting the message. But then later on, when the Powell started taking some questions, that's when all hope was lost for the bulls out there. He said the recent financial conditions had tightened and stressed that recent turmoil has, quote, a little bit of volatility. And that was enough to kind of spook everybody. He went on to say, broadly speaking, we don't look at any one market. We look at a really big range of financial conditions. What matters for the whole economy is material changes in a broad range of financial conditions that are sustained for a period of time. Speaking in the abstract, some volatility probably doesn't leave a mark on the economy, so we look for that. What we're seeing here is a tightening, also pretty much saying we don't care what's going on with other people out there, pretty much indicating Trump. The Fed's going to do what the Fed's going to do, and that kind of really combined to slap the markets. The S&P is off, hit a 15-month low after the announcement, pushing beyond that now. S&P off nearly 15%, also from its high on September 20th. Half of the S&P companies are down by 20% or more from their 52-week highs. And some parts, like small caps, have already kind of pretty much transitioned to an official bear market. So not exactly boom times out there unless you're looking for, of course, volatility, in which case you're getting some of that in spades right now. VIX cash threatening the upside here, hitting 28.21 right now, getting as high as 28.63. And that's pretty much, we hit about 27. And so, it's pretty much higher than, almost 28 yesterday, but not quite. So, so not exactly a lot of bull time, except in the volatility land. Interesting nugget, by the way, Bloomberg, I think it was, crunched the data. The market not loving Powell so far. Pretty much all 7 big Fed announcements under Powell so far, the S&P has sold off. They crunched the numbers on all of them back to March 21st, off about 0.2%. May 2nd, off 0.7%. June 13th, off nearly 0.5%. August 1st was kind of the light one, only almost unched, off about 0.1%. September 26th, off 0.3%. November 8th, off 0.3%. And of course, the 19th, off 1.5%. So not a lot of love out there, Uncle Mike, for the Fed chairman. I know you're a resident bull, so maybe you're not loving him either. What are your thoughts on all that brouhaha this week and what we're seeing unfold in the market today, sir?
All nonsense. Everything's going to go up. Now, I think that with what's going on right now with the Fed, I think it feels like he's trying to really show that he's a separate entity and not just a puppet of the president by doing what he's doing. But then again, the conspiracy theorist in me is thinking, oh, that's just what he wants you to think, what they want you to think, and they all got you fooled now, and then they'll do but who knows? It's one where when we're looking at it, the Fed's raised rates and the market's kind of suffered from it. It's going to be interesting to see over the course of the next year if he does follow through on the expected 2 rate hikes. And the other thing that's going to be interesting to see is how the market reacts to it. We rallied when he said at some speech that we're close to neutral, and apparently the market thought that meant that all the interest rate hikes are done, but they're obviously not. So I think that's definitely a big factor in this. I mean, the other things that we've been talking about recently they're all macro at this point. We have government shutdowns, we have China deals, we have all sorts of things that are going on. And with everything going on and everything being macro, the one thing that I believe is that all of this can simply be wiped out with the right words and the right tweet. Now, whether we're going to get the right tweet and the right words, who knows? But when this market does recover, I think it's going to recover very quickly. But in the meantime, I've always said I'm long-term bullish, short-term cautious, and now is definitely the time to be cautious. I think that if you are a shorter-term trader, like I am with some of the portfolio that I manage, I'm sitting this one out at this point. I still have my out-of-the-money call that's pretty much worthless right now till January. I'll sit on that. So if we do get a major rally coming back, I'll do it. But I think right now it's kind of, do I believe in this market for the long term? Absolutely. But in the near term, I'm kind of viewing this like I do Apple in some ways. I don't care how great technicals are with Apple. I don't care what price level it is. Well, maybe if it got down into the 80s or 70s or something like that, I'd consider it. But I guess where I'm going with this is that we need to have those macro issues fixed in order to get some type of stability with this market. And then until we do, it's going to be a pretty volatile market. And markets that are this volatile, I typically don't do well in. So I'm going to be a water boy and stay on the sidelines for the time being, at least from the short term. For the long term, for long-term holdings that I have with clients that I'm hedging or rolling calls or things like that, or covered calls, I should say, then I think it's business as usual. But I tell my clients, I was talking to them today, you just need to have a longer-term mentality in that volatility and times like this are a very big part of markets. It's a fact of life. It's been going on since the beginning of the markets, and it's never going to end, in my opinion. Maybe it will, who knows? So you're going to have volatile marketplaces. So with the short term, I'm personally staying out of a lot of this until we get some type of stability. And for the long term, I'm staying in it for the long-term holdings because that's what they are, is long-term.
You heard it. The Perma Bull, Uncle Mike, on the sidelines, at least with the short-term discretionary stuff right now. So read into that what you will. Our Perma Bull, Uncle Mike. Deciding discretion, Uncle Mike, to be the better plan. Maybe probably a good choice given these turbulent, topsy-turvy markets we find ourselves in today. What's lighting it up today? A lot of stuff over there coming into showtime. The S&P SPY in particular had just hit about the 3.5 million contract mark, about 3.54 million. That's a little bit shy. The ADV has been popping up lately, as you might imagine. Hit about 3.72 million out there for ADV. VIX actually a little light today, 177,000 contract, which is surprising given this upside move we've seen out there. I'm going to pull it up again really quickly and just see if any more contracts have hit the tape since the start of the show. But pretty much overall, it's been kind of a light day. And VIX hit up to 210,000 contracts now. But the ADV is coming off a bit as well. It's only down to 584,000, kind of reflecting that. Kind of what we've been saying before. VIX itself has been a little bit anemic in all of this surge of volatility. It hasn't really been, shall we say, lighting up the tape. And today, again, another sign of that, only 210,000 contracts on the tape. And a day when VIX is, it's the cash at least, is obviously moving. The futures moving a little bit as well. Let's look over here for the most active in terms of the equity options you guys like to sling. Bank of America lighting it up out there today, taking the number one spot from Apple with 508,000 contracts on the tape. Looks like that's dramatically in the call camp, 89%, 452,000 of that coming on the call side, which is interesting. Only 11% on the puts. Interesting for a day like today. Apple number two, 412,000, much more evenly split, about 56% calls to 44% puts. So that's still under their ADV, which is almost 650,000 contracts. Number three, GE, 283,000 contracts, actually leaning to the put side. Number four, Facebook, 256,000 contracts. Not a lot of good headlines coming out for Facebook of late. That's probably why the puts are leading the dance today. About about 56% of that action coming on the puts. Number 5, Twitter, 230,000 contracts. Also puts leading the charge. And number 6, Amazon, 193,000 contracts. With number 8, AMD. Actually, that's number 7, AMD. Excuse me, 190. Amazon and AMD have always kind of been neck and neck of late. Like 1,000 contracts difference here. Also, calls leading the dance on both of those. Number 8, Microsoft, 177,000. Number 9, Micron, making some headlines this week. Not on the good side either. 173,000 of that puts leading the dance with 58%. And round out the top 10 is good old Baba with 152,000 contracts on the tape. Calls leading the dance by 58%, 42% for puts out there. You know, it's been kind of interesting, Mr. Uncle Michael. Look really quickly. There are some, of course, there is still a little bit of earnings season popping off. Not a ton, listeners, as you might imagine, given the fact that we are kind of coming into the tail end. No one really wants to report around the Christmas and New Year's holidays, so we're seeing kind of the tail end of that. We have Conagra today, Nike also, and Carnival as well. Carnival, as well as Carnival's restaurant down the street, as well as Carmax, excellent restaurant, but not quite reporting earnings today, as well as Carmax on Friday. So we do have an earnings move report here for Carnival. And Conagra. Conagra was hovering around $29 going into the earnings. They were pricing in about $1.40. They actually sold off about $3 to the downside. So pretty much a little over 2x what they were pricing into the downside, hovering around at $26 right now. Carnival was about $55 going into their earnings. They were pricing in about $2.40. They sold off about $3.40. So exceeding it to the downside by about 41%. They're hovering around 51 and change right now out there in Carnival land. So you can check out all those for yourself over there at theoptionsinsider.com. Oh, I do believe we are joined, better late than never, by the Rocklouser. Mr. Rocklouser, it's been a topsy-turvy week. Mike and I have just been kind of breaking down all the turbulence with the Fed and all that goodness. I know as a diehard Mainer, diehard libertarian, also diehard vol guy, this week must have been an interesting one for you. What was catching your eye in today's activity or this week's activity, sir?
Well, what's funny is something I never thought would have happened, but that's why you plan for things you think will happen and then you hedge for things you think that don't or won't. Is VIX would be making a high after the Fed, announce their policy.
Yeah, that is a little strange when you think about it.
I think for the first time, probably in, I'm going to say 10 years, right? Maybe one time or another, but where the Fed announced policy and stocks went a lot lower and nobody knows what's going on. So I just think, at least from a vol point of view, it's pretty clear the Fed is not going to do anything to help the stock market. And that has people a little freaked out. And to be honest, I think that's better in the long run. You know, rates are going to go up, government borrowing is going to become more expensive, and everybody has to act like a grown-up. And right now, as far as like the equity market goes, they don't like it. And that's the way it is. And I think it's probably going to be it looks like a good buying opportunity, but as of right now, on we go.
Yeah, it's been interesting. Everyone's kind of waiting for the angry Trump tweet to come out and kind of go after Powell. Trump was not shy about in the lead up to this decision saying he wanted them to pump the brakes. They kind of responded a little bit in some of their statements. So the Fed not exactly liking being told what to do. Trump obviously doesn't like that either. So should be an interesting back and forth coming. He hasn't really done it yet, which is kind of surprising. Maybe a little surprising amount of reticence on his part. Maybe he's got other things on other fish to fry right now. But we were talking here on Advisors Option Show as well. Interesting study coming out of Wells Fargo. They polled about 1,000 different investors of all different types, and they asked them things like what they're looking for in the market, what's concerning them right now. A lot of them saying they weren't really spooked by market volatility. They were saying 68% reported being comfortable riding out a 500-point drop in the stock market on a single day and therefore maintaining the equity position. So I guess they're okay with today. They don't say, but what about subsequent 500-point sell-offs? That might be a little bit too much for them. But they're saying their volatility concerns weren't too high, but they wanted the Fed to stop it. 61% of investors in the Wells Fargo poll said the Fed should not raise rates any further. This is before yesterday's announcement. This is up. Now, you might say, well, investors are always going to say that, right? But they actually are up from 46% in May. So they're actually biased towards raising back in May. So interesting, maybe a little bit more savvy group than your usual group who says, oh, no, never raise rates because it kills the market. And then, but there is some kind of contradictory data points in this. They also say, the same people who said they could stomach 500-point sell-offs in the market, 52% of them said they had little or no risk little or no appetite, I should say, for risk to generate higher returns on their investments, which is interesting. And let's see, well, what else? 53% saying they didn't have a lot of trust in the Fed, which is no surprise there. And then let's see. Oh, yeah, they also, some stuff about the economy. Kind of interesting, though, just people have this weird view of their own risk perception. They come out and will say, I can handle this big, stark sell-off in the marketplace, but I don't have a real big risk tolerance. Kind of a bit confounding. Also confounding, they were more concerned about inflation than they were about rates. They say inflation could be an even bigger stressor than rates. 70% of the respondents expressed concern that inflation could go a lot higher, but still more, almost the same number also said the Fed shouldn't raise rates. So kind of a bit of a contradictory data point there as well, because one would assume the primary reason the Fed is raising rates is because of inflation. So a little bit interesting kind of contradictory data points. That's why they say lies, damn lies, and statistics, right? Speaking of data, we got more for you because it is time to keep on rolling into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the funky portion of the show. Time to hit the Odd Block. We kick things off in the funky land. When he's not busy digging tunnels, he's making cars over there, Mr. Musk, in Tesla land. Tesla feeling the heat today as well. Off almost 4.5%, almost 15 handles, hovering 318.25 right now. That's off, what did it hit? Oh, on December 13th, so a mere week ago, it hit a high of 376.80. So off, shall we say, substantially, 60 handles from that near-term high out there. So Tesla, not one prone to be not volatile, and exhibiting that here as well. By the way, I figured out what was going on with our scans earlier for the Tesla downside puts, is that this was showing me a scan for pretty much the whole week leading into today. Not today, though, which is why. So that's why the numbers were a little bit off last time. Looking at so far for this week, which is data pretty much from the past week, so the 13th all the way through the 19th. These puts have been active, downside puts have been active, the biggest trade being 3,250 of the par puts in Jan for 9 cents. Excuse me, looks like people crushing the bid there, so maybe some folks deciding to get the heck out of Dodge. They saw a 9-cent bid and they're starting to close out. Remember, there is size OI on that strike. We also saw more prints later on for 9 cents as well, though, that same day. So maybe people just putting out 3,000 lots. You never know with these things. They were actually pretty tight then. They were 9 cents at a dime, so it could have also been someone working a 9-cent bid, and they got hit, which makes it seem like they were selling those bad boys, but it could have actually been buying. So it looks like a bunch of blocks of those. March 20 puts also going up for 16 cents, 3,000 times as well. That one was opening. Not a lot of OI in March. So March 50 puts, 1,200 lot going up. So there's not a lot of our old friends, the Jan 20s. But a lot of others, Jan 80 puts, 500 lot for 4 cents. You can get the 80 puts in Jan now for 4 cents. Go figure. Interesting stuff. That saga, we'll have to finish up. Once those puts go out, we'll have to do a kind of a complete look back at the life cycle of those Jan 50 puts and kind of how high they got, nearly $3, how low they got, which is probably around now, and see how all of that played out in the marketplace. But let's keep on rolling. Our eye of Sauron is always scanning. Sometimes it looks back, too. We like to highlight what we were scanning before. Today, we're going to look back at some stuff from the show we highlighted on October 29th. We highlighted 3 trades that day. Let's get into some of those. We started off out there in good old P&G. Of course, Procter & Gamble. Today, they're 91.40. But back on the 29th of October, we talked about someone coming in. Looks like they were loving themselves some upside to the tune of the April 95 calls for $1.95. Paper gobbling those up. Looks like 20,000 times. They were a dime wide, $1.88 at $1.98 at the time. Looks like they came close to the offer for $1.95. This was opening, I should say, at the time. And this was an interesting one. Also worth noting, kind of like our similar trade before, we saw more volume the next day. 20,000 more went up the next day. So the 29th and the 30th, a total of 40,000 of these went up with prices around the same level, $1.88 or so. So looks like paper, and that was all opening on second day too. So the OI total got up to 40,000 right quick after all this paper. And this trade was an interesting one. It actually looked pretty good. The stock got up there fairly quickly. And it actually, as of last week, the stock hit nearly $97, $96.90. So it seemed like if this guy wanted to get the heck out of Dodge, his 95 calls were in the money. He had a good chance to do it. Unfortunately, he did not. These things got as high. Let's see. We show them here. They traded well over. They got up to in a week ago they were trading for $5, $5.10. So he put them on for $2. He could have more than doubled his money. As of yesterday, when we were and coming into today, they were looking around $3. I think they kind of come off that. Of course, the stock's at 91.35 now. So they were trading around $3. He was still looking pretty good, Mr. Rock Lobster. He still had a buck. He was still $1 and change to the good. But unfortunately, these contracts are still open as of coming into showtime. Maybe he took them off today, but as we're doing the show. But so far, kind of a bit of a weird one, Mr. Rock Lobster. We don't profile a lot of ones that seem like they're good trades. And then I guess our friend, he got a little greedy. He wanted more upside. What do you think of this, Mr. Rock Lobster? You put on the calls. You know when you're buying calls outright, you need this thing to pop, right? And it did. He got his pop, and then he didn't do anything about it.
Well, I think so. I think this particular person is a more long-term. They're a long-term investor. I'm seeing 42,000 on the strike. They're still up pretty good money. I mean, I think part of this didn't like P&G get sold off like Johnson & Johnson. Johnson & Johnson, when they sold off, it kind of got dragged down with them. So I look at this and I go, wow, they have. I think they're up money, and they're not too worried about it at this point.
Yeah, I mean, they're still up money. We shouldn't mock. It's just they're up a lot less than they were. That's the thing. When you're buying, this guy gave himself some time. Obviously, he gave himself till April, but it's not like he's buying D's 2020 or something like that. So the clock is kind of the decay is going to start kicking in a month or two on these bad boys. Obviously, he's got some time. But still, and obviously the hindsight's always 2020. But when you get don't be greedy when you're buying premium, listeners. When you do this kind of thing, you need the thing to move pretty quickly in order for it to start paying off. And you got it. You got the move before the decay set in, which is when you want it. If the move happens after the decay set in, it's kind of like you're putting good money after bad now. Okay, you lost your money, now you got to make it back with the movement. He had it. He didn't really have any decay, and he got the move he wanted. It was kind of a good deal. Take them off, let it retrace, put it back on again. If you're still bullish, you can get back in and get those bad boys for close to the same price or a little bit more now. But still, you got some money in your pocket. It's not the worst thing. But apparently, Mr. Rock Lobster, he's in it for the long term. So we'll keep these guys on our to be watched category because we have until April. And we'll see if maybe he has a change of heart later. Maybe he takes them off at a favorable level. Maybe he'll take them off for $20 and he'll laugh at us all the way to the bank. But for now, at least, we have to shake our heads in disappointment at this one, saying you had your chance, sir, and you didn't blow it because it's still good, but you did miss out on a much, much more attractive level. That same show, we also profiled Exelixis Inc. Go figure, this is a biotech pharma company here. And at the time, we saw Feb 16 calls, lighting it up, paper gobbling these bad boys up for $1.35, 10,000 times. This was a weird one because it's kind of, as you might imagine, the market for these things is pretty wide. This name doesn't print a lot. They were 60 cents at $1.85. I don't think they found a $1.35 bid for this. I think they probably bought these. But still, this was an opening print. Also on a biotech, usually you don't see size call overwrites. Usually it's the other way. It's call buys because these things tend to move. And when they do, they tend to pop to the upside. So that's usually the kind of paper we see in biotech. So the combination of those two things makes me lean towards this one buying. And if that's the case, this one's another one that kind of worked out pretty well. But also is still on the tape, which is a bit puzzling. Let's see. The stock was, when this trade went up on the 29th, the stock was $13.65. Coming into yesterday, this week actually, the stock got as high as $21.80 yesterday before selling off quite a bit today, selling off nearly three handles, almost four. It's down to $18.18 right now, so it's off quite a bit from those highs yesterday, but still well north of the 1365 level, certainly well north of the 16 handle with these things. So you paid $1.35 for these bad boys. They were trading $3 not too long after, by the 2nd of November. These things had more than doubled, so less than a week later, a couple of days later, these things were trading $3. They have $4.50. They were trading back on the late, still a month ago. They were trading $4.45. So these things got all over the place, and they were looking pretty good. But coming into today on Showtime, the OI was still open. Also worth noting, this is another one like the other trade. This is very similar paper, which is kind of interesting. We saw the print go up on the 29th for 10,000 contracts. We saw a subsequent print going up the next day, also for 10,000 contracts. And it wasn't someone changing their mind, getting the heck out of Dodge. They were adding because the OI spiked up to 20,000 total after that. So someone was piling into both of these both days for prices around similar levels. They hadn't moved that much yet. So they decided they liked them so much they bought 10,000 more the next day. So these things all worked out fairly well. And yet, as of today, the OI is 20,000 contracts still. So, I don't know, Mr. Rock Lobster, we're 2 for 2 here on people coming in, gobbling up upside, having it work out pretty well. They decided the next day, they liked the trade so much they needed to double its size and do it again. And yet, both of them, this one much closer to home. This one goes out in February. But I don't know, Mr. Rock Lobster, another one where they're still on the books. What do you think about it? Maybe they need to call up you guys and have you guys work through when to take off. This isn't a hedge, it's a spec, but same thing with the spec. You know, you got to take it off when it works, right?
Generally, you buy options to close them. So, you know, I mean, the stock is definitely, I don't think anybody you know what this looks like to me? I don't think anybody really expected this reversal.
Caught a little flat-footed by Mr. Powell and Mr. Trump.
I want to say I'm just thinking. I think we're catching a little flat-footed. Same story. You know, people clearly making good purchases, but they're holding on for a little bit more. I mean, the markets are super wide in this, so exiting is not super easy. But I mean, whoever was buying these calls certainly did a good job on their purchase. But as of right now, 8 contracts have traded on the day, though, so they do not look like they're in a hurry. Just pick, you know, where market's going down, nobody cares. I don't care. Everybody's happy. They're not worried. There you go. They're just not. They're long and not worried, not bothered.
Yeah, I guess. You know, I'm pulling them up right now. Let's see. The 17s are 230 at 370, so those are deep. So you got to figure the 16s are looking even better. If my chain wants to light up here with where the 16s are printing, right there we go. All right. Yeah, they're 290 at 450, so a little wide, but still well north of the $1.35. This guy could crush that bid for 290 and still be looking really good. And I'm guessing he could do a little better than that, probably. Just going off on a hunch and saying probably. So let's assume at least $3. So he's doing pretty well on these bad boys. Even today, after this sell-off, it was looking a lot better, obviously, a day or two ago. But again, hindsight 2020. These guys all had the foresight to put these trades on and had the foresight to then come in and double the size because they liked it so much the next day, and yet apparently did not have any plan to take it off in any sort of reasonable time frame. So listeners, if you've ever been caught flat-footed with a trade that worked out and then you didn't take it off in time, you're not alone. Others are doing that right now as we speak, and probably for much more size. Let's wrap it up here with this is our resident cheapie. We also profiled that same day. We're 2 for 2 on that show. That was a good show. Let's see, the Genworth Financial. That was our resident cheapie on the day. And someone coming in, this was just already a contentious trade to begin with. We saw the Jan 2020 4 puts. This is a $4 stock trading for 85 cents. Looks like paper was buying those bad boys. There were no bid at 101. So go figure on liquidity on those bad boys. See, get outside of front month at the money Apple. Things get a little bit wider. But no bid at 101. He got them off for 85 cents. So yeah, he bought those. He's not going for no bid and selling them for 85 cents. If he does, he has the best broker on the planet. So this guy gobbling up puts for nearly $1 on a stock that's trading for $4. In and of itself, that's a contentious thing. Granted, he bought himself a little over a year at the time, but still. You could go out on margin and do things for about half that rate, $2, and I don't know. Good thing the Viceroy is not here, I'm going to say, because he would be deeply offended by that trade. But looks like this guy at the time, he kind of was panicking a little bit. The stock, this one on the 29th when that trade went up, the stock had dumped a couple of days before, hit 361, and it looks like this guy was like, you know what, that's it. We're breaking way through the 4 handle. I'm just going to dive in. Looks like he kind of overpaid a bit for some long-term protection, and he did it. He had very bad timing as well. The stock turned around almost the instant he bought these puts. So if you think you have bad luck, listeners, you're not alone. The stock rallied to nearly $5 within a few days of this trade. About a week later, it was up at almost $5. And then I guess maybe same guy, deciding he liked them when the stock was 360 or close to it. He had to really like these puts when the stock was $1 higher at 460 because someone came in and bought 15,000 more for 74 cents. So they'd only come off about a dime. Again, not a high delta on these puts. But they come off a dime or so. So he bought about 15,000 more for 74 cents. So now he's in for quite a few at an average price, around 78 cents or so. And these are also still open, not surprising. As of coming into today, the OI was 19,000. So yeah, 3,300 traded on the 29th, and then 15,000 traded a couple weeks later on the 13th of November. So the OI got up to almost 19,000. Then it's right about that same level right now. So yeah, another one where this one is contentious for a variety of reasons, Mr. Rock Lobster. You could take issue with spending so much for protection on a $4 stock to begin with. Maybe someone clearly tied up, maybe for stock reasons, maybe for other sort of legal reasons they can't dump the stock. They're a corporate officer or things. But interesting stuff, weird. So if you have any thoughts on buying a meaty put like that, have at it. And also another one, we're 3 for 3 here on people. This one didn't really quite go his way, but 3 for 3 on trades that were put on and are still open for size as of showtime today, sir. What are your thoughts on these GNW were meaty, not so much puts?
Well, let's see. You're buying a 4-level put for 85 cents. Now, what the heck is going on with that? Why do you do that? Why do you buy that level put for 85 cents? Don't you find that a little odd?
It would not be my first choice of trades, no.
So, I see this as a trade and okay, so things are a little always head scratching. Of course, I'm easily confused. Scratching as I scratch my head. I just don't see how it gets better for this guy and these puts. I'm not. It was kind of a crazy market opening in the beginning. It certainly, it looks like they bought them, and now they're just sort of slowly rotting away. Does I just you look at this and you see what were they thinking? Why did they buy them? So I don't know. I guess the stock could go to $2.50 because that's to make money, that's what needs to happen. So they've got a long road ahead of them. A long, long road ahead of them.
That could be the operative word for every one of our odd block segments. Why? Why would you do such a thing? So we have a lot of head scratching going on today here on the odd block. We're going to keep on rolling. Time for you guys to make us scratch our heads. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. You guys know the dance by now. You guys ask us questions. We ask you questions. It's a party here on the old Mail Block. Kick things off with our question of the week this week. Still running right now over there at Options. Make your voice heard if you haven't already. We asked you guys, and we featured a lot of different VIX alternatives, VIX competitors on our shows like Volatility Views and others over the course of the year. Which of these, none of them have really launched yet. There's a lot of them are planning to do so in 2019. Which of these, if any, is your favorite? Gave you three choices. The good old spikes, a.k.a. the SPY VIX coming out of MyX. We have our old friends at Volex with their Real Day / Real Vol, realized volatility products. We have the Nation Share stuff coming out of NASDAQ, which is the Voldex or SKUDEX products, which is pretty much VIX without the SKU. Or you're saying to yourself, I'm just gonna stick with good old VIX. I'm gonna stick with the one that brought me to the dance, even if it has issues. Mr. Rocklops, we'll start with you because this is in your neck of the woods. What do you think is winning our poll, and what is your vote if you have one? Which one of these is blowing your skirt up?
I think this one, I would like to see the realized vol product. I just cannot believe how it's going to trade. What I think is winning is people like probably those Voldex, SKUDEX products because they've been out the longest. But I would like to see the realized vol trade myself.
Yeah, there is an actual ticker for it, Volley. So you can actually look at the ticker for the Voldex at least. I don't think maybe SKUDEX has a ticker too, but definitely Voldex has it. You can watch it. You can't really trade it yet, but you can watch it. Yeah, that's kind of what's leading the dance right now. Actually, no, I'm sorry. 41% saying they're going to stick with the one that brought them to the dance, sticking with VIX. So VIX getting a little bit tarnished this year, getting kicked around a little bit, but they're sticking with it. 37% going to number 2 for Voldex or SKUDEX. Only 15% for spikes, and only 7% for our friends out there at Real Day, Real Vol, even though that one is kind of a very fascinating one. But you're right, a lot of inherent complexities to how it will trade. But if it can get out there, I think realized volatility is certainly a concept a lot of people can rally around. Now, let's see what we got here. StockCats hitting us up saying there's only 6 trading days left in the year, sharing this one with us, and he highlighted a picture of a bunch of analysts and what their price targets are for the S&P. With at the time when he tweeted this was 6 days to go, and let's just say a lot of them are quite lofty. 2750 for Morgan Stanley, Goldman Sachs 2850. This is the S&P, of course. A bunch of them at 3,000. Credit Suisse, Deutsche Bank, Bank of America, all at 3,000. JP Morgan Chase, Oppenheimer, Fundstrat Global Advisors, whatever that is, saying they're at 3,025. So 3,000 wasn't enough. They had to have 3,025. Wells Fargo 2850, far more reasonable. BNY Mellon also at 2850. So a lot of big firms, Barclays and others at the 3,000 level. Or beyond here, listeners, and yeah, we're threatening the 2,400 level coming into showtime, 2,450 at least. So, yeah, let's say all of these. I think this kind of speaks what you're saying, Mr. Rocklops. A lot of people got caught flat-footed with this reversal. They were clearly not prepared for this, not ready for this in any way, shape, or form. And at least the analysts certainly. We always take a dim view analyst here anyway. Look what the real money is telling you, not what the analysts are telling you. But still, worth noting if you follow such things. Most of these analysts were substantially higher. We got 6 days. Anything could happen. But doesn't look good for a lot of those prognostications on the upside there. A bunch of people were chiming in on Disney this week as well. I think there was some stuff up on our site and others about Disney. We were talking about Disney earlier in the week. TinSoldier talking about Disney, responding to us saying... yeah, he said, because there's talk about Disney stock buybacks this week. And he was saying stock buybacks are not happening, but you have to be blind not to see future growth in every business segment, media, parks, and studio, he puts. And I would agree with you on those. We go to the parks, and they're always crowded as hell, even though they keep raising the prices. So they make a ton of money there. The one albatross around their neck, obviously, has been the kind of ESPN and what to do with that segment. So they're still figuring that out. They have ESPN Plus coming out now. That's out now. And they have the Disney streaming coming out. So we'll see if those things are enough to stem the bleeding on that side. And if that is, you're right. It's otherwise it's a pretty powerful brand. And now that they have Fox, they have just about every entertainment staple you could think of under one roof. So if you want to bet on the broad macro entertainment space, Disney's not a bad play. Other guy chiming in, Danny Danny Desert. We're talking about Disney maybe looking on the upside. He says, I can give a couple of trillion reasons why it won't soar. Okay, maybe he's a beer. I don't know. You guys, Mr. Rock Lobster, Mr. Uncle Mike, any of you guys have any interest in Disney or any looking at? Let's pull up a quote here while we're looking. Uncle Mike, is that part of your strategic night, sir?
Not a strategic night, but definitely I do have some small holdings in it. I think that Disney's, it's almost like a mutual fund in and of itself. Disney, like you had described, an entertainment.
It's like an entertainment fund. You're right. Yeah.
Yeah, it's like Johnson & Johnson. Johnson & Johnson's like a mutual fund in and of itself. GE used to be that way until, well, maybe they still are, but it's a really bad fund now, if anything. But I think it's one of those types of stocks, and it's very broad range, and it has a phenomenal brand in that you can continue to go to the park. They continue to raise the prices, like you said, and people still like it.
Yeah, Disney park prices, tickets are like a future. They're always in contango. They're always looking up the further out you go out into. There's never. It'd be nice to have a little bit of backwardation, have them go down a little bit, but it ain't gonna happen anytime soon. Always up. Mr. Rock Lobster, you do any of your hardcore slinging any Disney these days?
Mark did look at a couple of bullish trades a while ago. It does feel like they own just about every chunk of the entertainment industry though right now. So, and I mean, you have to look at it and say let's just call it, it's all at a big discount. I mean, the market now is basically looking for a recession next year. That's the way it looks like they're starting to price things. Almost everything is off 10% or so, at least. And it looks like there's no end in sight. So I think there's going to be an end in sight when we have, it's still not the low of the year though for Disney. So yeah, it was about 104, something like that. So, I mean, the reality is, I think it's a great company. I think it's a great stock, and it's just, pick your spot at this point. But I don't see the recession happening, but I think there's so much chaos coming out of Washington right now that nobody really can see straight anymore, right? There's like this trade war thing and there's just, it doesn't seem like everything looked very clear and easy a year ago. And now it's sort of, I don't know, a lot of things are trying to be changed. And, I think you got to break some eggs to make an omelet, and that's what's happening.
Yeah, those eggs are breaking right now. Like you mentioned, Disney selling off, but not still not super low. It got as high as around 119. Actually, we hit 120 in the past 52 weeks, but it's at about 107 right now. So off those highs, but still off the near-term low, 52-week lows. We got about lows about 97 over the past year as well. So not quite at its lows of the year, but selling off those recent peaks. So if you're waiting for a little bit of a retracement in Disney, at least you got a little bit of one right now. Let's see, market Coopus, like this name says, and that recent market jolts are when fake and bloated stocks like Tesla will race to the bottom. Well, it's certainly doing that today, off quite a bit, as we talked about earlier. So, not a lot of love for Tesla out there today. Tesla's one of those ones. Second, someone says something angry about it. Someone else chimes in with the loves. It's very contentious, like politics. Maybe you shouldn't talk about, religion, politics, or Tesla at a dinner party because it gets people heated. Let's see. Oh, this guy's coming for you, Mr. Uncle Mike. This comes from Paul Drew, 2006. Remember we were talking on the last show, I think, Uncle Mike, you said that this is a market for crazy people, maybe borne out by recent activities since that show. The recent sell-offs have maybe borne that prediction a little bit of fruit, but he's disagreeing with you. He says, not really. He says he thinks smart people will be buying sales in this market. So, Mr. Uncle Mike, Paul Drew, 2006, says you, sir, are the madman, not the market.
I am the madman. I've been called worse. No, I would agree with them. If you're looking to do this on a stock level, holding it for longer terms, then yeah, absolutely. This is a phenomenal opportunity to do it. What I'm saying is that for shorter term traders, if you're levered, then I think that you are crazy if you're a bull like me. You need to just stay away from it if that's the case. If you're looking to hold longer term stocks, hey, great. But if you're looking to sell a put spread or maybe buy some call premium or something like that with any size, then that's crazy.
Well, there you go. Uncle Mike says, you're crazy back. So there you go. Nana, nana, nana. Nana, nana, boo-boo. That's what the internet's all about, right? Hurling insults. Now, everyone's being, we're just having fun here. Our old pal, Scott Somer, he chimes in all the time. He chimed in a couple of things. First off, he wanted us to know that 10,000, and this was yesterday, excuse me, the 10,000 of the January, expiring on the 18th, XLF 22 puts have traded. The XLF right now at about 23.5. This is, of course, the S&P Spider Financial Fund and Financial Sector Fund out there. So he wanted us to know about those puts. I haven't had a chance to dig into those. But, yeah, someone obviously feeling the heat. If this went up yesterday, like I think you said, then that was probably well-timed, given the fact that XLF only off about 0.5%. Today, but of late the trend has certainly not been north. It was trading 24.36. Just actually got as high as that yesterday. So yeah, it's been a little bit on a downswing of late. So if someone did gobble up some puts, I've seen worse trades. He also wants us to know that the SPY still has a $5 priced into its straddle to move through the December 21st cycle. Yeah, we are seeing some realized volatility in the marketplace right now. So that might have seemed rich, but I guess given today's moves, not so crazy. Mr. Rock Lobster, any thoughts? I don't know. You still watch XLF? Did you notice these puts going up? And also, what do you think about his interest in the fact that SPY still had $5 baked into it for the D's 21st expiration, at least as of coming into this morning?
And you know what's funny is we just released some sheets today, it's only for option pick clients only right now.
Sheets? You guys are printing sheets in 2018? Wow, I love it. Does it have it with different vol levels? Can I just scroll up and down, Do I have to be a half under, a half over, that kind of stuff? Is that how these sheets work?
It's actually not too far different than that.
Really? So Jan's like a half over, and then Feb's like $2 over, that kind of fun stuff, because your guy upstairs won't change his skews?
Right. So we're let's just say we have sheets that help people identify those. I put those ideas out in the Vol newsletter based on those sheets, and actually they're cheap. They were cheap. They were for a one-day risk, they were relatively inexpensive. So anyway, so at least as far as SPY goes, they have been underpricing the vol for quite a while now. And that's what the sheets say. As far as XLF, I haven't been really watching XLF much. I've just been watching the vol products and just trading those because there's been enough to do. So,
I know, Uncle Mike, you used to like XLE. Has XLF been on your radar at all lately? And what do you think about these puts printing?
Yeah, I mean, I use XLF as one of my wheels. And just for the time being, I'm just holding on to it because I think I'd hate to sell another covered call right now and have it appreciate. But in terms of these puts, if I wasn't in on it already, I would love to sell them at that level. And that would be something I would consider not crazy if I was looking to get into it, but I'm already in it. So that's an area with which feeling some long-term pain, or some short-term pain, but I think it'll be long-term reward.
There you go. So interesting stuff there. We like your puts to sell, and the straddles, yeah, given these big moves of late, the straddle, it may seem rich on the surface, but look what's going on in the marketplace. Not that rich after all. All right, let's keep on rolling into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. We obviously got macro on the brains these days, the interplay between the Fed and Trump, and, of course, the looming specter of a potential shutdown, a lot of other things that are hard to sometimes bake into the calculus of the markets, yet we try to do so nonetheless. Let's go back around the horn and tell you what we're watching for the rest of this week into the beginning of this holiday weekend. Let's start with you, Uncle Mike. What's on your radar these days, sir?
Everything macro, combine that with the 2,500 mark on the S&P / 250 mark on SPY. It's a pretty key number, so definitely taking a look at that to see if we close below it. But aside from that, it's just everything macro. And then if we can correct everything macro, I think things will be better in the marketplace, but easier said than done.
Mr. Rock Lobster, are you also obsessed with macro these days like the Viceroy used to be?
Obsessed with macro. I think so. There's the big forces are the G20 has a lot of debt, and eventually they're going to have to stop spending. And I guess the market, we've been Bernanke and Yellen sort of pushed off all those costs. I mean, Obama spent a lot of money, and the Fed monetized it, and now you're going to have to pay. And I don't think anybody really knows what that's going to cost. Europe has negative interest rates. It's like stupid bill. So, economies grow, but governments need to kind of right themselves. And I don't know when that's going to happen, if ever, but the market eventually will make them do it. And it's just how ugly it gets till that happens. So I think right now, part of that is the put under the equity market is going away. So where does that leave us? Where does that leave stocks? I don't know, to be honest, how low we can go. Can the SPY go to 220? Sure, it's only down another 10% from here. I could easily do that. We're below 2,500. I don't think a lot of people would have seen that even 3 weeks ago. We were trading 2,800. So the market's moving a lot, vol's moving a lot, and the fact that VIX is up today after the Fed, I'm writing some long VIX, long contracts, and I'm going to see what happens. Because at least right now, it doesn't look like there's an end of it. Maybe the government not shutting down will help, although it's mostly just kind of a Band-Aid type thing. So it's all news is bad news right now, as opposed to last year when all news was good news. So, and we'll see how it all plays out.
There we go. All those heady days when VIX was 9 and market could do naught but go up seems so distant. Yet it was not too long ago. February just slapped us in the face and awakened us all to the new market regime that we all live in now. Speaking of markets and all kinds of craziness, if you want more, you haven't had your fix quite yet, then stay tuned. Go get a cup of coffee, a nice beverage, maybe a little quick lunch, and come back if you're listening live in about exactly 13 minutes. Where we'll be breaking down all things on the futures option side of the fence. So rates with obviously with the Fed this week. Also a lot of crude action out there. Maybe some crypto, some metals. You never know what's going to sneak into the show. Cattle, who knows? Lean hogs. You never know. You got to tune into Twifo and find out. That's why the show is called This Week in Futures Options. I'll be coming at you exactly 30 minutes. If you're listening live, stay tuned. We'll pump some fun stuff into the stream for you, and we'll be back here in 30 minutes for that. But before we do that, let's go around the horn. See what everybody else has cooking up. Let's start with Uncle Mike. Uncle Mike, if I'm interested in websites that feature foxes and I enjoy clicking on them, where should I go? What should I do, sir?
By all means, come to my website at stcharleswealth.com. And if you're also interested in a website with a fox that has a financial advisor behind it that kind of likes to view markets like this as a challenge and not just a way of being panicky, give me a call or look for my information on the website. Once again, stcharleswealth.com.
So yeah, I don't want the wealth advisor stuff. I just want the cool fox. So can I still go there and just do that?
Feel free, by all means.
There we go. Click on the fox. Have fun. Listen, looks like Trump deciding he's not going to sign the budget. So, yeah, looks like we're probably going to have more red on the screen. Breaking news coming in there as we speak. All right, Mr. Rock Lobster, sir, what's on your radar? What's cooking, I should say, in the land of the pit these days?
Well, like I said, we just launched some spreadsheet products using LiveHall data, help people find trades. So instead of just market data spilling out at you, it actually reorganizes information in a way that's more useful to actually trading options. So I'm very happy with that. And other than that, you can see some new stuff out of us in the new year. And we're going to have a huge option pit sale for Christmas on our gold course. So if you don't know how to trade options and you want to learn everything you need to know about trading options, our gold course is the place to go. So look for our Christmas sale coming soon.
Christmas sale. Headed out over there to optionpit.com. Get the goodies while they are there to be gotten. A lot of goodies to be gotten in the land of the pit. Say that 5 times fast, I dare you. And check out the sheets. I'm intrigued. You guys send me a copy of these sheets, Mr. Rock. I got to see what sheets look like. And I'm thinking of my old the old micro hedge, our old Stafford flavor back in the day, and to see what sheets are like in 28. If you don't know what sheets are, listeners, maybe head on over to optionpit.com, get your learning on there. They're the tools we used to use as market makers to kind of keep reference as we're trading. So not just what your options are worth at different SPOO levels, but also in your head, which volatility level is for which month and all that kind of fun stuff. So it was fun. And then Sheets got gradually replaced by handhelds, and now then the floors went away and everything's upstairs now too. But Sheets used to be a fun old tool, and they're some good, they can help you with how options work, and maybe seeing it playing out in your head a little bit could help you. So check out over optionpit.com to learn more. If you're listening live, like I said, stay tuned. We'll be back here in now 28 minutes for TWIFO. We'll see you then. Otherwise, if you're listening on podcast, just listen to the next show. Sit play. And we'll see you then for more of the Option Blog.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.